We've got some new economic numbers this morning, and they're kind of going that way. Coming up here on The Job. Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. It's 8:58 here in the middle part of the country on Wednesday. It is November 30th, 2022. Here's your morning jog around the economic headlines of the world. Want to first chat about some U.S. GDP data fresh off the presses this morning. And guess what? It's pretty good. 2.9% yearly rate in the third quarter. Guys, that's still pretty good growth. Now, of course, we're seeing forecasts of recession and doom and gloom. Guys, it is a natural part of the economic cycle to have some years that are better than others. This year, with some inflation, has been challenging, but overall the economy continues to grow and continues to outpace levels from 2019 before COVID. Listen, everything you see in the news is designed to make you fearful. That makes you pay attention. That makes you click. Trust me. I used to work in broadcast news. If it bleeds, it leads. Ultimately, these headlines that I'm about to show you are exactly designed to do that. But overall, the economy is doing okay. Let's look at private hiring, ADP. We said last month, huge number. It was like 500,000 jobs or so. We said, looking forward, next month probably undershoots expectations because economists and analysts do everything on Excel, and they just want it to go like that. When the real thing is like that. Labor, data, economics, it's bumpy stuff. But we just want to draw straight lines through everything, and that's not the reality of the situation. The reality of the situation is things are stochastic. They move around in a random pattern. On a go-forward basis, when you interpret news like this, private hiring, 127,000, oh gosh, expectations were 200,000. That means things are slowing down more than expected, right? Because economists like to draw straight lines. They don't like to deal with reality. We said on this show back a month ago, hey, this number came in really hot, really good. Next month, probably not going to come in so good. And look, it happened. Gosh, it's almost like averages are meaningful, and you want to know in advance what's going on. Ultimately, what does this mean for next month? It probably means that it'll come in a little bit better than expected because that's just how these things work. Last but not least, before we get you off to a nice Wednesday, DoorDash is one of the companies that's going to lay off folks. About 1,250 folks. It's not too much in the scheme of big tech, right? We have Amazon doing tens of thousands, Facebook doing tens of thousands, DoorDash doing just 1,250. Ultimately, unprofitable tech needs to start growing with bootstrapping. We need to have profits that are then reinvested in the business rather than burning cash to get market share and then ultimately destroying shareholder value. Lots of these companies can do this, and when they start turning on the gas, start reaping what they've been sowing, I think it's a good time to sort of look at the 12, 18 month time frame and see, okay, which of these companies are really going to show profitability? And if so, are they a good investment at these reduced levels? Some names are becoming quite attractive to our investment team, especially when the economy turns and goes northward in 2024. If you want some additional information throughout the week, feel free to find me on the internet. I'm always out there. Till then, you and your family, hope you have a really good rest of your Wednesday. I'm out.